So, welcome everybody. It's Nikos here again. I think we can start. You can hear me, right? You can hear me. You can see everything. Great, great, great. Yeah, it's a new thing for this year. Um, Generally, it's bounce trading is nothing new, but we decided to go in much detail into this. And today we are going to discuss one specific strategy on bounce trading that you can really use right away. And because people are still logging in, but it doesn't matter because everything is recorded. So in case you miss something, you can watch the recordings later on. We will send you a link with a replay. Okay, so everybody ready to start? And one thing I always like to ask before we start is where you guys are from, because when I see the countries and cities, I would really get excited every time. So just give me a quick, just to make my day. Yeah, there we go. Toronto, London, South Africa, Greece, Pakistan, Istanbul, Hong Kong, UK, Italy, again South Africa, Budapest. There we go. I was there in November. Great city. Mexico City, Portugal, Nevada. Wow, man. That's it. That's why I like sometimes, technology. We can connect so easily. It's perfect. Great, guys. So let's start. Today, power of bounce trading. And I'll get right into the topics with you quickly. Sofia, okay, Bulgaria, there we go. Our topics today, in order for you to understand the bounce trading strategy, especially for the new traders. Are there any new traders here? In between, just asking. Do we have anybody that is totally new? I mean, if yes, it's no problem. I'm just... Yes, Danny, okay. No? Okay. Great. Okay, so we just quickly, we don't spend much time on those things, but just to make sure we go over trends and ranges, because if we don't know what a trend and a range is, we cannot look for bounces, right? Choosing a forex pair, we can do this together. I have actually prepared already a couple of those that are good enough or nice enough to use as examples. Looking for support and resistance in a range or trend, because we need to understand that in order again to find the bounces here. And then placing a bounce trade order on the daily, 4-hourly, 1-hourly chart, because we want to combine a little bit day trading and swing trading. So we go not into really low time frames. Of course you can do this, but we don't need that today. It's not only important that you understand how to use the strategy. And then later on, after that is done, we go into our new Power Bounce EA. It's a very powerful tool in order to actually find not only the bounces, but looking actually for the signals after a bounce appears. So because we don't have the time to do that live, or we don't want to sit there and doing it live, the AI will do this for us and send us alerts, and then we take action. And then I'll explain a little bit the structure of the full workshop, the bounce trading workshop that will be live in about 2 weeks. How to use the Power Bounce CA, I will show you today how that works. And of course, we are not going over this today, but this will be part of the workshop, the full workshop. And Dr. Jeff is going to take over with his, he names it like ninja mind tricks, meaning like how to solve issues that we sometimes have if we cannot get out of this bad habit situation and we continue losing money. There are some nice tricks he will share with us, some tweak strategies, how you can actually use the strategies, the bounce strategies and other strategies, and find more and more good setups, and also how to create a professional trading plan. And of course, we have also today what we're going to have afterwards is of course a classic questions and answer thing at the end, right? That's a lot, but don't worry about it. It's I'll take it really, step by step and to the point. It won't be complicated at all, and we should be ready with all of that within with a lot of confidence. I would say within an hour. Usually it takes longer, but I would say an hour is good. Okay. Now, before I start with this, any questions in between? Is there something you didn't understand, or can I just continue? I guess I continue, right? Okay, so we practice right away our bounce trading classic market order. So what we're going to do right now is identifying the range or trend. Then we'll look out for the support and resistance to define targets. We use those time frames as I explained before for day and swing trading, mostly to turn a day trade into a swing trade actually. And of course applying our great money management rules, and then how we place a trade when a setup appears on a chart. These those are the 5 steps you need in order to actually use this strategy. Okay, we start right away on a chart, and for that, just 1 second guys, just 1 sec. Yes, now I have three charts for you. I have prepared, 1 second, the GBP US dollar chart. This is a trend, kind of a trend still. I have the Euro US dollar chart, which is, it was a trend and now it's a wedge, so a range, a wedge or range wedge or whatever, but you get the point. And I have a 4-hourly chart, historical chart. I go back to share with you a classic range. Now, I would say we start with the easy chart, which is the trend, and then we go step by step to the next ones, right? What's the first thing we do, guys, when we look at a pair? What's the first thing we always do? I'm asking, of course, the more experienced traders or traders that already are with us for a while. If you have trouble seeing my chart, it must be on your end. Everybody can see it, right, guys? Trend direction, top-down approach, volatility, main trend. There we go. Everybody's up to date. That's it. Perfect. Exactly, right? We need to know, we want to know if we have any direction, if we have volatility, meaning if the market is actually moving, going somewhere. And with other words, if it's worth looking for a trade in the first place. Because if we don't have volatility, if we don't have a clear trend or clear range, then we don't want to trade anyways. Okay, and I'm using my classic Spartan system template, which means I have right now hiking ashy candles over the classic candle charts, because I just like the hiking ashy candles because they are measuring the power between sellers and buyers in each candle. You see the white in this case are the buyers, the red are the sellers, so it's not confusing, it's to the point. And then if we see the spikes in between here and we see spikes on the candles, we know that something is happening there. So it is really filtering out noise, and it's a to-a-point chart with no distraction at all. I'm also using one EMA only, that's the moving average exponential. I just have 4 different settings. I have the 633, 200, 36 and 12. But right now, in order for you to get, because it's about bounce trading, I don't even use the 206.33. I just use the trend following EMA, which is the 36, and the blue one, which is the 12. It's the volatility EMA. That's enough for now. You can make your notes if you want to, guys. In case you don't want to make notes and you want to pay attention, then it's great because it's recorded and you can watch it later on anyway. Now, if I look at this chart, GBP US dollar daily, what do we see? Do we have a trend here, a powerful trend? Do we have something else? How would you describe this chart, especially lately here? So there's no right or wrong, just give me your opinion. What do you think? Just, spend a couple of seconds on the chart. Trend, okay. Complex pullback, yes. Correction, exactly. Uptrend with pullback, yeah. That sums it up, right? It's an uptrend with a bigger retracement or pullback. There we go. So we agree on this one. We don't have to overanalyze a chart like this. One classic rule is if the chart looks too complicated and it takes too long for you to see what's going on, usually it's nothing wrong with you, it's something wrong with the pair at that moment. Yeah, so if it doesn't make sense to you, just walk away from the chart. We don't want to trade something we don't understand. Okay, so also make sure you make your notes, and if you have any questions after me explaining something, I'll ask for questions, and then you can ask me, because if you in between write something, then it will lose a little bit of focus. Okay, just remember the questions. So this is a daily chart, and what we usually do is we do our top-down approach, meaning we go from the higher to the lower time frames to see what is going on the chart, what is really going on. And most of you will know and remember that traders don't do that. Nobody checks the weekly chart because they think it's just too big. It doesn't make any sense to look at this. But the truth is that especially all the bigger institutions and the traders that trade for a lot of money, they will look at those higher time frames, because here you see what is really happening. You see the real major support and resistance areas, and we like to quickly check them when we do our first approach. We want to know where our next area of support and resistance is, especially visible on this chart, right? So if I look at this one, I can draw my horizontal lines and say, okay, that was my previous high. If I would go close to this, what else can I see on this chart back in history? So right now what I can see is that exactly here, there is not much. Even if I scroll down a lot, this is already a weekly chart, meaning each candle 1 week. So what about lower? We know already that we had a lot of something going on here, support in combination with previous support down here. Price did react also on the 12 EMA, created a higher high and higher low, but it looks like it wants to move higher now. So this we already know between here and here was support, or is still support. This doesn't change, so we don't have to leave it here, or we don't have to leave it here. We leave it somewhat in the middle, and we know that this whole area is our support area on the weekly chart. We also know that price did move up to here, so we don't really need to place another resistance line here. We could, but we don't have to, because price did already break those areas and found those touches here in combination with this. Can we agree on those two lines for now on the higher time frames? Because everything higher here as well is resistance, right? Look at all those touches and the spike. But it's too far away from price, so we don't really need it. We just need the ones that are close to price action. So do we agree on those two horizontal lines on the weekly? Yes or no? Just give me a quick yes. I'm just explaining this on this first example. On the other ones, we do it faster. I just want to make sure everybody is, up to speed. Okay. Now, what else can we do here? We already know that if the price stays below the 36, it's a downtrend. If price is moving above and stays above the 36, creating those nice 1, 2, 3s, higher highs, higher lows, higher highs, higher lows, we have an uptrend, right? Especially when it's staying there. So what we do next is we draw a nice trend line. Exactly, support trend line. Here we had horizontal support, some double bottoms, a higher low here, and then price started to create those nice higher highs and higher lows, right? But we need 3 touches to define a powerful trend line. So if I do it like this, 1, the lowest point on the chart, 2, 3, great, and then I'll change the angle a little bit because the price did change the angle here. We don't have to go from here now because we have 3 more touches down here, 1, 2, 3, and we want to connect those retracements, pullbacks between the bodies and the spikes of the candles, not exactly the bodies, but something in between. And if we extend that line, it's really close to the 36 EMA, which is our trend following EMA, right? So this is really, really good, because now we have a trend line that agrees with the 36, which is our trend following EMA. So we have a confluence of events in one area. Are we okay so far, or am I too fast? Everybody okay? More or less. As I said, it's all recorded. Okay. Perfect. So we don't need to draw more lines on the weekly chart because it's very clear what's happening here. Price is creating higher highs and higher lows, and we know it's trending. Now, what changed is that we had so much volatility on the weekly chart that right now the price isn't retracing exactly like before with 3, 4, 5 candles back to the 36, but it did only retrace back to the 12. With other words, it was a little bit too fast, let's say. Okay, and right now it's taking a breather, it's resting in this area. Now we know that this is our volatility EMA, and as long as the price is over here, it means there's a lot of volatility on a specific time frame. So on the weekly, it's still fast, but of course on a lower time frame it will look differently. Now if price doesn't want to move up and it wants to move down, where's our next area of support? Where's price likely to go to? If price doesn't move up, where's likely to move towards to? Let's say to the trend line, right? Sorry guys, let me drink some. Okay. Now when that happens, or if that happens and price is going to reach this area in future, not right now, what is likely to happen here? Because of the history we have already on this chart. Exactly, right? It's probably going to bounce. We never know. It brings us to our topic. We never know if price will bounce a little bit or a lot, but the reaction in an area like this is, if price is reaching this area, not exactly by the pip, but more or less, you can see there are always some spikes here. Price is trying to break, penetrate the line, and then go back. But the first reaction, if price is not just going through, 9 times out of 10 on a powerful trend line, it will bounce the first reaction. And that means we can take advantage of those reactions on all time frames and all combinations. Okay so far? Yes? Okay, great. Now, that's what we need to remember. But we are not there yet. Price is still up here. So now that we have our resistance and support line and a powerful trend line that also agrees with our trend following EMA, we have already a lot of information we can use. It's kind of a procedure I always do before I check for any trades. Top down, trend lines, and then going to the next step. So on the daily chart, we go from the weekly to the daily. We get more details, of course. Every candle now is 1 day. Lower high, price did bounce on the first touch of the 36. You see, if I would zoom out a little bit and I change the angle now of the trend line, because we have 1 touch, 2 touches, and the extension here is 3. You see in this example, price did touch the line by the pip almost, and then bounced, boom, like that. Okay, so another example for powerful bounce in this area. If you go on a lower time frame, you will see more than just 1, 2 touches. You will see here probably 3, 4 touches. But right now we are on the daily chart. So 1, higher high, higher low, 1, 2, 3, a little range, another bounce, retracement, another bounce. And if I just extend that line, if I extend it, look what happens here. What did happen here? Price did come back to the 36, not to the extension of that line, but to the 36, and the 36 is a trend following EMA. So the first reaction is usually also a little bounce. I mean, a little on a daily chart could mean in this case almost 400 points. Okay, but you get the idea. And then price created more lower highs. It bounced again, because if I draw another line, 1, 2 touches, and extend it, look what happened to the third touch. 1, 2, lower high, coming back to the 36 in combination with that trend line. 3, another 200 pip reaction, and then price coming back down. It looks like it wants to break it, but then it's spiking. And what happens then? Because of the extension of this line, what happens here? Price does bounce again. 1 sec. 250 points, retracing back, and now you can even change the angle of that line a little bit, because you know already that it bounced. 1, 2, 3 here, and look at the extension of this line, extending, another bounce, another 250 points. So can everybody see the power of a couple of lines on the higher time frames and the extension of those lines? Can we all see that? That's the most important part, that we understand. We do, right? And you can really, afterwards, when we are finished, you can literally go practice this on whatever chart, and you'll see it works everywhere. Okay. Now, this is okay so far, and this is the daily chart. Let me go down to the 4 hourly, just to do the whole thing down to the 4 hourly, and here you can see more details. Look at those extensions. Before, there was a daily trend line, and then you had 1 touch on the daily, 2, 3, 4, and what did you also have on the 4-hourly chart? What about if I connect 1, 2, extend to 3, because this was spiky, so, but here you can see a good third touch. Look, when I extend between the bodies and the tails of those lines, what is happening? Can we all see the bounces? Boom. Coming from the daily chart, ranging, touching, boom, bouncing, boom, bouncing, like a tennis match. Okay, and at some point it will be, you know, exhausting for both sides. And then what has price to do when it's getting squeezed in a wedge like that and it's bouncing on support and resistance all the time? What happens usually? Magic ball, there we go, yeah. It will break out. There's too much pressure. It cannot stay there forever. It has to go somewhere. And the breakout will be fast usually. Okay? So, when it's breaking out, it's moving. Usually, not always, but if the trend is powerful, it will go and break out in the direction of the main trend. When you do your top-down approach, you'll know what the main trend is, right? So that happens, and you see the extensions here, and then the big extensions coming from the daily chart. You would know that this area exists of support if you didn't. If you're not doing a top-down approach, you would never figure out that those areas of support exist. If you don't check the weekly and daily chart, you don't know that there is a line here. You will see, oh, this is going down, let me sell. And then you sell, and then for some reason it's going up and you don't know why. Okay? So remember, a combination of horizontal support and a trend line coming from a daily chart, boom, reaction. Another reaction, extension of this already existing line. Okay, and here you can do the same thing. 1, 2, it's not always by the pip, you know, but it getting close to this area. You can see the wedge. Also horizontal support here, previous. Those touches in combination with those lows and those. Now, there's always a reason for something, but we are not interested in every tiny bounce all over the place, but only the good ones, and the good ones are visible and coming from which time frames, please? Who can tell me now already? Higher, yeah, that's a smart answer. Okay, higher. How high? Exactly, right. Weekly, daily charts are the are ruling here. Exactly. So I'll go back now to my daily chart. On this example, we don't need to go lower. We want to choose the chart that looks best. So if a daily chart looks better than the 4-hourly, or the 1 hour looks better than the 4-hourly, then we use always the one where things look clean and clear. We did that already. We also knew that this was happening, right, on the daily chart, and price did move out of that. The main trend is up, so it is likely that this might retest this area if it wants to go up, and then slowly or fast, you know, after bouncing and spiking, and that it might reach the next areas of resistance, the next highs. That is what usually happens. If price does not want to do this and it's breaking those first areas of support, then we know, okay, it might react here or in this area somehow. Yeah, it usually will give us a smaller or bigger retracement, and then it will go down. And if it goes down, we already know where to look for the next bounces. We just go to the higher time frame, extend our trend lines that are easy to spot here in combination with a 36. Maybe if it's moving smooth, you know, it's getting close to horizontal support as well, maybe down to this low, we don't know. But if we have a confluence of events, like price maybe getting close to here and here, and it's sitting here in this area and then spiking, we know that the first touch will end up in a bounce, most likely. Yeah, so be prepared by just drawing a couple of lines on the weekly and daily chart, and then you know stuff that 95% of all traders just don't know, and it's really not complicated at all. Are we good so far? We are only half an hour in and explained already the top down and also identifying the bounces with the extended trend lines. So it's a fast group. Cool. Now, a daily time frame, of course, is slow in terms of real trading. That means it takes a while for the price to reach those areas, and then you might say, oh man, if I have to wait for the daily chart, you know, if price is up here and I have to wait for the price to reach this, could take weeks. Get it, understand all that, but still we need those lines in order to look for the good trades. And of course you don't have to only trade on those higher time frames, but knowing how it works on the higher time frames will make it easier later on the lower time frames. Okay, if we check now our, let's just focus on this pair and only on the daily chart to get into a bounce trade. Let's assume we are super swing traders or position traders and we want to get in here taking a bounce trade off this pair or this chart. Because remember, I want to teach you the bounce trading strategy and how you could trade it right away. So let's go back on history. It's easier like this. We have done the weekly top down. We know we have 1, 2, 3s, and we like this is the first and second touch. When price is doing the third 1, 2, 3 in the weekly chart and coming back, we assume that a touch in this area will result into a bounce, right? So if I switch from my weekly chart to my daily, the trend line is exactly the same. 1, 2 touches, and the extension. Let me draw the line a little bit different, so it makes sense to everybody. I erased the EMAs so it looks easier for everybody. Okay, let's assume we want to take advantage of the bounce here. We have two things here. We have a weekly trend line in an uptrend, but we have also something else. If you look in this area, what else do you see here? Just look at this. Yes? Consolidation, range, exactly. So we have a range. You see, we have this nice 1, 2, 3, and then price is ranging until it's finding the extension of this line in combination with now an area of horizontal support. Like we have a range in that trend. So price is trying to find this line or the area of this extension. Because it can't find it here, it's starting to range. We don't care why. You know, I always get questions like why. I don't know why, really. I'm trading like for 20 years. I don't know why that happens like this. I asked others, they also don't have a clue. I asked people that are into trading, oh man, like billions, and they don't know. So, or they don't tell, I don't know. But it doesn't really matter, does it? As long as we know that it works like this. We also, like, I personally don't know how a car works, but I can still drive one. It's the same thing. We don't need to know everything in order to take advantage of our charts. It's probably better if we don't know all those details. So, here we go. We have the range. and then it's finding this area. So we have another confluence of events. We have horizontal support line, we have a range. You can even draw that from here. You'll see the previous highs in this area more or less, but important is that we understand those parts here. It's the same thing. Okay, so a tiny range visible on the daily chart because price is trying to get closer to here, and when that happens, it's starting to move up and it's getting out of here. So if we were to trade trying to bounce long, let's say in this area, we have only 1-2 touches, and say, okay, look, 1-2, it's an uptrend, let's get in here. Okay, what will happen? Even if the price, if you place your count protection order below the lows, your stop loss as they call it, if you place it below here, even then it takes forever for the price to actually get into profits, because that was not a good timing. We only have 2 touches. There's no powerful trend line in this area, but here there is one, because this is coming from the weekly and daily chart, and after that range, price is touching this extension and then it's bouncing. And if I then just acknowledge the range, but I really just need to look at it, I don't need to go crazy. This is just helping us. It's another reason to wait for the bounce in this area, and then I draw my classic, let's say 2-3 touch line like this, 1-2-3 touches on resistance. I just need, you see it's also like a small wedge, to wait for the price to actually get out of here, break this line, and then I can trade in this area because of the range in the uptrend, and because price is finding the extension of our powerful weekly trend line in combination with the range here that is also visible on the lower time frame. Does that make sense so far, or am I too fast again? It's okay, right? It's really easy. Okay, so when that happens, the classic rule entering a trade like this would be wait for the price to hit a trend line, and if the price is bouncing of a trend line, then I'll get in after trend line break like this. So I would get in somewhere here, for example, placing an order. I don't have to wait. I'll just see the price touching this area. I'll say, okay, whenever price is reaching this area, because it will break my little trend line, I want to go long. And of course, I already place my account protection order below those lows. Now for traders that trade on the higher time frames, this is nothing fancy and big. It's a normal stop loss or account protection order of, in this case would be like what, 170 points. And some people might say, hey, this is crazy. If I place a account protection order like that, it's too big exposure of my account. But really that depends on your money and risk management, and we get into this later on. Okay, I will get into this later on. I just want you to focus right now on those simple things. Give you another example. If I have 1 touch here, 2 touch here, and the extension 3rd touch here, as we said, and you know already that this is an uptrend, price create a higher high, it's coming back and it's bouncing on this trend line, what will happen here? So what could we do after the bounce here? Could we place another order somewhere? A pending order. Could we do this? Of course. Right? Just by saying, okay, price is going down. I don't know if it will go down and maybe move lower and then spike and go back up, but I don't want to sit here and wait. So price already getting close to my support line. What I can do, I don't mind if it goes up immediately or if it goes down first and then go up. I just place my order to buy after the break of this line. Like for example, you could also do it here, 1 2 3, another entry here. I just place an order, place my stop below the visible lows here, and whenever price is getting out of this area, it will place my my trade account protection order here. We don't call it stop loss, we like to call it a account protection order because that's what it is. And then price is going up, tracing back down. Okay, so if it will break out again, I place another order here. Exactly, and then I can do the same. I could do the same here on the extension of this one. Now here, what is the difference between do we get this simple market order or pending order thing in this area? Do we all understand how it's done now? It's really that easy. There's no magic to this. It's just how it is. And that was so funny about trading, you know, the easier it looks, you know, the easier it is actually to trade. If you overcomplicate it, it doesn't work. Okay, what's the difference between here, the extension of this, and for instance, here we have a nice break. We can draw a line, we can place an order here, one here, even here it's easier. But now if you look at this, what do we need to have before we could enter a trade? Like let's say it touched this and you want to take a bounce long. Could we place an order just here to buy, place a stop here, or should we wait for something first? You know, if we are buying, you know, it's just a pending buy order. If you make it as a pending order, unless you see it live and you just, you know, do a market order. Late but still okay. What I want you to pay attention to is this. Remember, here we have a kind of a clean retracement, a couple of spiky candles, but here we have already lower highs and retracement. So we had this line, remember, between the bodies and the tails, something like that. So we really would like to see the price breaking this line, more or less this area. Okay, because it is still creating lower highs and lower lows, and it could be that price wants to bounce here and actually move lower, break this line. So we always wait for a existing trend line break, or if it's a 1 2 3, a 2 to 3 line break, we need something to, a good reason to get into a trade. The bounce alone is not enough if we have a pullback that is visible on the chart and it looks like a potential trend change on the higher time frame, because at this point price did already move. It's trending for so long, we never know when it's going to change. We have also on the weekly chart, remember, this extension for this support. So if price breaks that, it might go down to here, right? And we did that right in the beginning, and we don't ignore that fact. So we say, okay, if price wants to go down, I need to see a break of this first and then a setup. But because we are going for bounce trading, we want to see a bounce somewhere. And to be conservative with bounce trading, we need a good reason. This usually is the bounce and the break of a 2 to 3 line, or bounce and the break of an existing wedge or range. So what you do, you place your order actually higher. You draw that line and place the order here. And price is you can place it when price is down here, but you place the order here. You say, okay, price is down here, but if it's breaking out, if it's really breaking out, I will get in here in this area after the break. It doesn't matter where exactly, it's not by the pip, it's more or less, because we don't calculate in pips our risk, we calculate in percentage. That means our account protection or will go, of course, below that point, not the lowest, here, and then we get in here to target what? Because okay, we get in, we know how to get in, all great, but we haven't talked about where to get out. So where do we get out, or what is our target when we get into a bounce trade? Recent highs, next resistance area. Exactly, that's why we did draw our resistance lines before in the higher time frames, because we want to know when we get into a trade, what is our target? Where do we start taking our profits? So, and our longer term goal on this trade, even if we take incremental profits, is this line, the previous high for now. And only if it's going fast and really crazy, we can then still take, you know, our target and move it higher. So let the price chase the target. It's a great thing, but we need a really great goal and target in the first place. So when we got in here, knowing that here's resistance, if I get in here and place my account protections here, and in this case it's more or less, let's say 150 points or something on a daily chart, okay? If it's on a 4 hour, there will be probably half of that. On a 1 hourly, maybe a third of that in pips. But it doesn't matter, because if I measure the distance from here to up here, and this is like 700 points, and I have account protection order of 150, is it worth trading it? It's about 3+ times my risk. Of course it is. Right? Our general rule says we want a target of at ideally 2 times of what we risk. Like if we risk 100 pips, our target should be at least 200 pips away. Better higher or bigger. Okay, but at least 2 times is a general rule. That means if I have a risk calculator, which we have, and we say, okay, my 100 pips account protection order is only 1% of my account, but I'm going for 2 times more, I'm risking 1% to make 2, or I risk 1% to make 3. So long term, we make profits because our targets are bigger than our account protection order or stop loss, and because we have done our homework and we get into trades that actually make sense. So we have a winning ratio of at least 50% for people that are new to trading and do still a lot of mistakes, and for the more experienced guys, 70% and higher. This is just how things are. Okay, but it doesn't matter, because if you know you have 10 losing trades, you lose $10 for example, but then you have 20 winning trades, you made 20, you keep 10. It's simple math that even I understand, and I'm really bad at math, as you know. So we have now good entries, we have a top-down approach drawing powerful trend lines, support and resistance lines. We have a bounce on an area, we place an order to buy, but only if my target and next area of support or resistance is at least 2 times higher. And we risk only 1% on, let's say, a powerful trade where we have like a big target, And if it's a late entry, meaning like the trend is already running forever and we have like bigger retracements and we're not sure about it, or the target is not high enough, we might risk less, only 0.5%. Okay? Okay so far, guys? Again, you don't have to remember it, it's all recorded. So what we did now simply is we did a top-down approach, we did draw some lines, we looked for entries, targets, and how to place a account protection order. And of course, one more thing, you don't have, I like to split positions into multiple parts, as you know, at least 2-3 parts. But if you practice bounce trading, you can just split the positions in 2 parts and say, okay, I get in here, I take half of it out somewhere there, and the rest if price is reaching my target. You can also manually start trailing the stop closer to break even, or to break even if the price hits the first target. This way it's a win-win scenario and you can't lose anymore. So keep it really simple to start with. That was the first example. Do we need any breaks, or can I continue immediately to the next ones? Now we do it much faster because we know what we have to do. And this is just a one basic bounce trading strategy that you can use right away. Not complicated at all, and it works crazy. Okay, so I continue. Let's go to the Euro US dollar chart. It looks more or less like the previous one. Let's check the weekly quickly. If I zoom, I have nothing really, it's just a high. I have the 633 here and the 200 EMA. Now the 200 EMA and 633, which is really, really important for us, those are long-term, let's say, trend following EMAs, and they're also acting as major support and major resistance. Okay, so for example, when price is moving far away, like it's just going through the 200, and then it's coming back, a first reaction in a retracement, the first touch on the 200 or close to the 200 or 600 is usually a range or bounce. So it's very important that we pay attention to those areas generally. I'll tell you why later on. I go back. Here are my previous highs. Horizontal support I could place down here because that's my previous high visible on the Euro US dollar weekly chart. And then I go down to my daily chart. And on the daily chart, again, what I have is 1-2 more touches on the lower time frames and the extension. Look what happens to when I extend it, where it goes to. Very close to those areas, right? And again, what happened here? I have another angle, 1, 2, and look, when I extend it, what happens here? Close to the 36. What happened here? Price came back all the way back down to here, bounced on the extension, and moved up. Okay? So we have 300 plus points just because of the touch. We also had double tops, and when price went back up, it spiked here and came all the way back down. So we had a range here. We had a triple top, and then price did move down. It did also react on the third touch here on the lower time frame visible, but not that much, and moved lower. But then what happened then? On the extension of this, what happened then? Almost by the pip, price did bounce again because of our simple trend line with 3 touches, 1, 2, 3, extension, boom. And then here between the bodies and the tails, another bounce. If you ignore the spike, 1, 2, 3 touches, extension, another bounce. Can we all see the power of those simple lines on a daily chart? Yes or no? Not complicated, just simple charting. No tools, no fancy software, just drawing your lines. Can we see this? Perfect. Great, guys. Same thing here. Let me get rid of this. Just look at the higher ones. I switch to my 4-hourly chart. Now you can do this on all the time frames you want, as long as you start from the higher ones. If I look at the extension, I'll say, okay, this is a big spike. How should I get in here? Should I just get in here on the 4-hourly? Because if I check my daily, that was already lower high, and if price is bouncing here, it will probably move higher and reach the extension of this line or the horizontal line, right? So could we just do it on a daily chart? We could get in here, placing an order here, even if price is still down here with a account protection below here. If we check this, this would be 200 points risk, okay? But now what about our targets? From here to here is only 140, up to here is about 200. So that would be 1-to-1. Like I would get in on a daily chart with a 200 pips a stop to go for 150 to 200. Is that the math we like or not? It's not big enough, right? Exactly. It's not big enough. We want a bigger target. So, but I still want to trade the bounce. What do? I just go to the lower time frames. And on the lower time frames, I can say, okay, here is a spiky candle. It's going back up. But of course, I still have a trend line like that. This is my 1, 2, 3, 2 or 3 touches trend line. So if I get in here on the first white candle, because it's really telling me that it's spiking, I have the risk of a bounce here and price might move lower, and then that was for nothing. So what do? Should I take it or should I wait for the break of that line and place an order here higher? What should I do? Any ideas? I'll tell you right away, guys. It's up to you. You know, this is an aggressive way to do it because it's happening before the break, but you have a really great reason, which is a powerful trend line coming from a higher time frame. That would give you a smaller account protection order. Therefore, the targets are big enough. But if it doesn't work out, it will hit your account protection order. In this case, because that would be like an aggressive way to enter, what we could do is simply risk less. Risk 0.2% or 0.5%, not 1%. Okay, if it's breaking this, then the account protection order is probably bigger. Okay, but you have, let's say, a better confirmation. The account protection order is bigger, and then you have to measure if the targets are still big enough. So if I have a, let's say, a stop of 150 to go for 150, 60 or 200, it's more or less. It's not exactly the best thing. Okay, so you either do it like this or you get in here. And if you get in here and you say, okay, I get in here because I don't like that entry, but I place my stop here. It's, you know, some people like to do this as well, but the thing is, if price retraces back to here and we test the line before it goes up, you are out. And that I see often people, what traders do, they find their own way. They want that entry but not that stop, so they start trailing it too fast, too early or too close, and in the end they get stopped out because the stop is not at the right place. It has to be in this simple strategy. Using this simple strategy, the stop or account protection order has to be below our trend line. Otherwise, it's not a bounce trade anymore. Make sense? There are ways to get in differently. but we are covering one strategy today. So if you want to do this, you have to do it correctly. Yeah, you cannot mess with those rules because out of experience, they just don't work. Okay, I'll tell you what works, not what does not work. Are we okay so far with this? Perfect. So it's the same strategy. I didn't change anything. I'm just sharing with you different scenarios. It's still the same thing, but because we don't have big enough targets, we have to be more conservative on the management. So sometimes we have to go on a lower time frame to find the entries. Or if we don't like it, we just don't trade. And now I'll show you one more example. And this is a classic chart, the USD Canadian dollar chart. I actually prepared this on Snagit. Let me see if you can see this. Can you see my screen? Okay. So what we have here, look. Let me do it like this. You can do funny things here. Let me fill this with something. Okay. One top and a double top. And then it's the first time on the lows. And prices coming down here, touching this area again. And then it's touching this area again. So here we don't have, it's a 4-hourly chart. We don't have a trend. We have a clear range. We have tiny trends in that range, but we'll see price is not really moving lower after this third touch here. Okay, we know already, okay, price is touching here, it's breaking the 36, it's crossing over, crossing back down, not creating a really lower point on the chart, trying to retrace, and then it's still not creating a lower point on the chart. So we have now a triple bottom. Do we all see that? Yes? And that means that right now it looks like price doesn't really want to move lower. And I already have like 2 touches in this case on resistance. I don't have any trend anymore, and price is not moving lower. So here it's the same thing again. I could just simply place an order saying, okay, if that line breaks, I go long here, place an account protection order below the lows. If, and that is already like not that far, but you get the point, and you can also end a little bit earlier, but you'll see, if I know where resistance is, in this case there is nothing else because I checked before on the charts, I have 2 touches, I know the middle of the range is somewhere here, okay, and here would be the entry. So my first goal is, in a range like that, if there's no trend, I want to create a win-win scenario as soon as possible. That means I'm going for the middle of the range. The middle of the range could be something, there could be some EMAs or some highs, for instance those highs here, the previous highs. And if it's only 1-to-1, it's fine as long as I create a win-win scenario, meaning I go in, I place my target for the first lot. Let's say we split the position into 2 parts here, and when price is hitting that, I'm taking this and slowly move that higher. I don't have to place it to break even, but at least higher, so in case it's going back down and hit the account protection order, I still keep some profits. If it moves higher and it's breaking the middle of the range, I can still move it up to break even, and then I'll target this. And when price is reaching this area, I'm happy because maybe I risk 1% to make 2, or a little bit more if the target is 2 or 3 times bigger than the account protection order. And then what happens here, we have another area of resistance. Why? Because we already knew or know that we had our 2 touches, and now it's a third. If price doesn't break that, especially when it's going like a rocket like this, it will usually bounce. It's a range, right? So the bounces don't happen only in the trend, they actually happen a lot in the range as well, right? It's the same thing. We just don't have higher points on the chart. Higher points. So if we would draw the line like that, it's the volatility line, the 12 EMA is the volatility, and we'd say, okay, if price goes down and moves lower, it will probably go to the middle of the range again. I can then quickly get in here, place an order, place my count protection order, create a win-win scenario here, and leave the rest for the price to reach this down here. Okay, guys? And here I can do the same thing. Price is going down to here. I'll say, okay, if this is my new low, it's a spiking here, it's really spiking. So I'll say, okay, if price is going up, I draw at that point my line. So let me draw another color here. Like this at this point. If price is breaking this, I place my entry here. Okay? But price doesn't do that. It's actually moving lower. Boom, like that. So you'll see this at some point. It's okay, still, if it's coming back, maybe that's not true. It's just a fake, a false break. So maybe it comes back. And then I can still place my order. I can, you know, maybe you get rid of this order, you place it again and say, okay, I'll place it again. And if that happens, now the good thing is you know where the lows are, and what you can do, you place your stop below the next low here. Price is retesting this area, coming back into the middle of the range where you take your incremental profits, and then at some point it's finding the highs of the range. Of course, when you're going for the highs of the range, you're not targeting exactly the high. You always go 10-20 pips depending on the time frame, of course, a little bit lower, like you would go for here somewhere, not exactly the highs, because you never know if price is going to reach this area, right? And in this case you get it again, and here it's reaching the middle of the range. You could do the same thing again if it makes sense to you, drawing another line. It looks like that, placing an order, making sure that it's a one-to-one thing in the middle of the range. If it's not, lower risk, and then the middle of the range. And if it doesn't do that, you get your one-to-one at least, and when you start trailing your stop to break even, and this happens, boom, you still keep the first part of the trade. And then you'll see another bounce. You see here we have another bounce. So what would we do here? What would we do here? Can we do the same thing with a spike? Can we place another entry after drawing, let's say, a line like that? Of course we can, right? So we get in here, place the order, go for the middle of the range, and then the low of the range. Again, don't remember it, it's all recorded. That's it actually. And if I go now back to my live chart, that's the same chart. Price did go up to here, and look what happened after this spike. Magic! Not really, right? It's simple. We have the bounce, count protection order, getting into somewhere here if you want to, going for all, even lower, sorry, earlier, if that breaks after the spike, getting in here, creating a win-win scenario, and now, oops, sorry, I don't need that anymore, and now it will reach this area. What happens here? Of course, you can also take everything out here and try the same thing again, placing order to buy, but price did not want, and of course then we have trend following strategies where you just get in a lower time frames, take advantage of the new trend. But the bounce order would just be nothing. You have to delete it after a couple of hours because price did not go back, and it's all fine. Yeah, so those are three ways to three examples on how to trade a simple bounce trading strategy manually from the higher even to the lower time frames. You can do this. I wouldn't do it lower than 1 hourly charts to practice on, because charts can get messy on the lower time frames. You can even do it on a 1 minute chart to practice on a demo account, no problem, but only to practice. Of course, the lower you go on the time frames, the more false signals and funny things will happen. It's just too much noise on the lowest time frames, right? But you can do all kind of combinations, taking advantage on the 1 hourly chart of the ranges, the same way, placing the orders like that on bounces here and here. Of course, you do the top-down approach first. I'm just showing you a little bit how the lower time frames look. We don't have any ranges really. Those are all trending charts, but you get the idea. If you know that there's a powerful range on that higher time frame and you're going to trade this bounce, you can also take it on the 1 hourly chart, not only on the 4 hourly and daily chart. It's the same thing. Sometimes the charts look just nicer on the higher time frames, sometimes on the lower time frames. But what I want to show you here, let me just get rid of those things for you. Want to add something to the charts. It doesn't matter which one, I'll just choose one. This is good enough. Yeah, and it's even a difficult one, so it doesn't look that easy, but you get the point. So I'll choose a difficult one. It makes more sense. Okay. Now, I want to share with you our powerful bounce EA. So what I do, I just add this to the chart right now and show you what this does. Because in our full workshop, Jeff, what's the date? I always forget the date. We have a 5-day workshop explaining all those strategies, right? And I want to make sure I get the dates right. Let me check. I think we start at the 31st. Could that be? Yeah, check please. Because we are going to cover all 5 strategies, and I'll get into that immediately. I will go back to the chart. I want just to show you this. So 5 powerful bounce trading strategies and the bounce EA combo. So how do we combine the EA with those 5 strategies for swing, day trading and scalping? Today we did like the bounce classic market order, pending order, at least the basics of it. You can start practicing with that. There's a little bit more to it, but it's more than enough because we cannot focus longer than 1 hour, and we're already here over an hour. So take this and start practicing. We also have the false breakout bounce strategy. Breakout reverse strategy means like if the breakout isn't happening and it looks like it's bouncing, but then it's actually breaking through. How do we get in there to take advantage of the great breakouts afterwards? And of course, the classic bounce breakout 1 to 3 strategies. How to get in with the classic 1 to 3 setups and combine all that with the bounce EA. So it's all about bounce trading and the reaction afterwards. Like what is price doing after it's reaching an area of support and resistance and after it's bouncing. So Friday, March, okay, get it. Sorry guys, I thought it was the 31st, but 30 Friday is good. So What this does, some of you probably have the risk EA, an older version. This is the newer one. So it's a combination of the risk EA, easier to use this time. It's not that difficult to drag the entries and everything. I show you, but it's combined with the EMA 200 and 633 bounces, because all the strategies that I mentioned before we can combine with the 200 and the 633 EMA. What will happen? When price is reaching a 200 or the 633, I'll go back and show you on a little bit not too easy chart. For example, here we have a powerful trend line like this, and then price is not longer bouncing on this trend line, but below. Of course, we have to do a top-down approach for that as well, and I will explain the strategy during those 5 days in much detail. We cannot explain those things in an hour. We need for each strategy a full day, okay, to explain how it works and how to use it in combination with EA. So when price is bouncing a trend line like that, it's not bouncing anymore, and it's breaking a trend line like that, it's usually touching the 200 or 633 for the first time, and this will also be usually a bounce. It will end up being a bounce. So we don't want to sit there and wait until that happens, because we might not even remember that there is a 200 or 633. We just want to make sure when it happens we get an alert. So we have our our EA, and what it does sorry guys, I have to drink water. It will actually send an alert the second it's touching the 200 and 633 after doing our approach, and we know exactly what we are looking for. And when that happens, it will immediately go off, meaning you will get, it'll ping on your chart, you will get a push notification to your smartphone or to your email, and then it will stop doing it, because when price is touching the 200 EMA, especially on a lower time frame, and it's touching it 5 times in 10 minutes, you will get alerts all the time. So when it's touching the first time, you will get an alert, and when the candle that you're looking at, depending on the time frame, is closing above or below that EMA, you get another alert. So you know now that we had a touch and we had a candle close, and then it will go off automatically. That is so you don't get a million alerts all day long. Okay, what then happens, depending on the strategy you want to use, which we will teach during those 5 days, depending on that strategy, you will go check the charts and see if there is something worth trading, which usually there is. Okay, so you can then place your orders using this EA, because it will calculate the risk for you. For instance, let's assume you have a bounce on the 633 or 6-200 combination on the 4 hour, and you want to get in on a lower time frame. It's also fine. You got the alert already, you know what you have to look for. Doesn't really matter where that is right now. Let's say here, and you want to get in there. So now what you do, you do your approach. You probably know already where your support and resistance is after doing your homework, and you'll say, okay, I want to go in here, I want to place my count protection order below here, and my target is this area. Maybe I want to take one position, maybe 2 or 3. You can get up open up to 3 positions, so split the whole trade into 3 parts, or maybe only 1 or 2, again according to the strategy. And then you tell your EA, just risk 0.5% by default, or risk, I don't know, 0.70, or maybe you want to risk 1% because a powerful trend line break. So what this does, it will calculate the lot size you have to trade in order to expose the account to only 1% automatically, and the only thing you have to do is placing the trade, placing the account protection order, and it will also calculate the targets. You can set this by default. Same thing will happen for the 633 EMA. Okay. 1 second, guys. Okay, so now unfortunately the markets are closed, so I cannot show you live, but I guess you get the point. So how that works is you take your entry and say, okay, let's assume you have a bounce here and you want to enter here, and you want to place your account protection order here, and you want target 1 1-to-1 and target 2 2-to-1. You can change this. Okay, you can also just place the order and then change the targets later on, but it's important that when you place the order and your account protection or your stop loss is here, that you calculate the risk with the original numbers, the entry and the stop. You don't want to say, okay, I risk, let's say 1%, and I have a small micro lot practice account or mini lot or standard lot account, and I know that this 1% is, I don't know, 2 standard lots or something, and after you place the order you then manually drag the stop lower or the targets higher, then you of course mess with the math. So that's not what we do. We stick to the rules, simple. And what happens here when the bounce is going to happen, like for instance down here, when the bounce is happening and you get filled, you don't have to worry about anything. You just place the order, you go to sleep, you go to work. Remember that many people are very, very busy, don't have much time to trade all day long, but when it's really easy to just check an alert on a smartphone if you have done your top-down approach on the pairs and you waited actually for those bounces. You just place the EA on your chart, wait for the alert, and then you just manually say, okay, I like that bounce, I like the setup, I like the targets. I just place it 1% simply with one move, switch it over to here, account protection order, and I'm in. Okay, and you can use all those features at once, but you can also just deactivate some of those. For instance, maybe you're not doing the 633 and 200 EMA strategy, which you should, because the 200 and 633 EMA are used really by the big guys. I'm talking about like big institutions, big banks. They will look for those areas, especially when you have a range there like that. Again, I'm going to teach you this during the 5 days. And we have a combination of this, okay, a trend line, let's say, and price is reaching the 600 and 200 EMA, a combination of this, and we get some alerts there. Okay, we really want to take advantage of those moves because those guys do as well. They really look for combinations of 200 horizontal support and resistance, and we like to use the 633 because I've seen over 20 years of trading that those combinations are super powerful. It's crazy what that does. And the EA will send you the alerts, and then we place our orders and we go to sleep or do something else, right? What you can do with the EA here, if we don't trade the bounces, or maybe there are no bounces close to the 200 and 633, and we have like a trending pair, we can still go and change this. For instance, right now price is bouncing on the USD Canadian dollar on the 36 on the 1 hourly chart, right, and on the 12 EMA. So we might have a powerful trend line we want to draw. We say, okay, if price coming back to that 36, I want to trade this, but I cannot sit here and wait for the price to reach it. So what you do, you go to the properties of your EA, and it's very easy how that works. There's some technical things you just have to ignore. You can, here is your targets, your risk reward. You can do 2 to 1 if you want to do the classic bounce trading strategy. Maybe you want only 2 positions, so you get rid of the third. Maybe the second position is like 3 times your account protection order. The risk, that's the maximum risk. So if you never change this, please, because you don't want to mess with money management. But what you would do, you can say, okay, I want an alert if price is reaching the 36 EMA, and I want one because on the higher time frames the 12 EMA, and you do like this. And now what happens? Magic, you will get the alerts when price is reaching the 36 EMA or getting close to the 36 and 12 EMA. Get the same alerts, and you can do the same things. You see now we have 2 positions running, and it's showing you immediately 2 positions because we changed that. You might not even want to see this here, so you can hide that. You can also close everything from here. You can move the stop to break even with 1 click. You can open your pending and open market orders just by clicking here. And one another great thing is that you maybe you don't want to trade, you just want to trade manually, and you don't want to see all those lines. So you can, for instance, where it says hide EMA alerts, you can hide this, or hide the lines. You can just put that, change this to true. Alerts, just for example, I just put that true. If you do this, boom, it's suddenly gone, and it's not bothering you anymore on the charts. Okay, so it's really, really powerful. And those are the basic features of the EA. They're really, really good. We will add some more tiny little gizmos into that. We still have 2 weeks. You will like that as well. But you know, it's so easy to use and so powerful. Make sure you don't miss this workshop end of the month. You still have 2 weeks, of course. So let me go. Did I forget anything to explain on the EA? Jeff, Tomek, sorry man, I'm talking so much sometimes I forget stuff. All clear, right? Okay, so back to this. We will combine this with the other strategies, how to use it, especially the 633 and 200 EMA bounces, which are super powerful, and all the other bounce trading strategies that you can just combine with the EA, because it will save you a lot of time. You know, you don't have to sit in the front of the charts. You just check your email or your smartphones for alerts. Then you just check the charts. You've done your homework, your top down before, so you just decide if you like it, you take the action, you take the trade or not. And it's much easier to focus on your simple trading plan. And as I said before, we are also going into the psychological part of trading, like some tricks, you know, to maintain focus for you, to maintain focused on the strategies, to really, you know, not get sidetracked too much. So it will be a powerful thing, and this is the link for it, guys. Let me just copy. Can somebody paste it into the Jeff, can you paste it into the chat box, please? I'm not sure if I can do this here. Okay, there we go. Go there, you will see all the details, guys. You will also have, like, for the first 3 or 4 days, a much better price. You will see that when you click the link for the early birds, as they say. And we will, of course, this is all recorded. It was just 1.5 hours. We were really fast this time. Usually it takes much longer. You can watch the replay later on, so don't worry about it. Also start practicing a little bit on your charts. Draw some lines, support resistance lines. Look for those bounces. You might have already questions. You can write those questions down. So when we are doing our sessions, the 5 days events, after every session, we get into the questions and answers, and then we talk about it. So you probably have some questions, which is normal. Yeah, that's it actually, guys. I'm not sure. I don't think there's anything else. I don't want to say more because you want to focus on this first. And now you can ask any question. Is there anything you want to ask about the bounces? If you don't have any questions, that's great. And I always know I must have explained it really perfect. Yes, first of all, we wanted to focus on a classic trend following bounce, trend, let's say following EMA bounce, right? Or just a trend line bounce, and then a classic range. So when we get good at this, focusing on 633 and 200 EMA bounces will be much easier later on. But I didn't want to do this today because it will get, it's not complicated, but if you don't know how to draw a classic trend line and take advantage of bounces there, if I already start with the 600 and 200 immediately, it will confuse people. We don't want to confuse anybody. Okay. Okay, guys, great. Yeah, I hope you liked it. Please start practicing. Again, we send all the we send the replay to you, to all the emails, and I'll see you soon. If there are no other questions, okay, thanks. Thanks, guys. Enjoy the rest of the day or the rest of the night. And if you have any questions, send us some emails. Okay, perfect. Hey, you're welcome. Yeah. Thanks, guys. Enjoy the rest of the day or night or wherever you are, right? See you soon. Bye.